Welcome to Basic Trading, Episode 4, Supply and Demand. Before we begin this presentation, I just want to remind you this presentation is not financial advice, and I'm not a financial advisor. Let's jump in. Today we're going to talk about supply and demand. Supply and demand is probably the most important concept that you can understand about markets. It's fundamental to all markets, whether it's the stock market or the candy market or ice cream market or car market, whatever. You can relate it back to pretty much anything that you're, a buyer or a seller in, and it'll. Once you understand this concept, basic concept, a lot of how prices are moving in whatever market you're looking at will make a ton of sense. And I urge you to really master this concept. We'll talk about what it is. We'll talk about how it impacts prices, the simple model of how supply and demand impacts prices. We'll talk about how you can utilize supply and demand in trading, since trading is in a market. And of course, we'll get a little bit technical with it and show how to identify zones of equilibrium, the so-called supply and demand zones, and how you can leverage that for your trading. So to start, supply and demand is a fundamental economic concept describing how prices are determined. So supply refers to the quantity of some item offered by the sellers at various prices, and demand refers to the quantity that buyers are willing and able to purchase at those prices. So you can think about it in terms of stocks, right? If you have more shares available to be sold, then there are people willing to buy it. Eventually, people will set bids that are lower, and the sellers might meet those bids and prices will start to fall. If you have something where it's a stock that everybody wants to buy and everybody's piling in, a good example might be Nvidia, right? You know, everybody wants to get into it. They're willing to pay higher and higher prices, and there's, fixed amount of supply. Those prices are going to start to go higher. So you can think of it in those terms. So let's look at the 5 base cases for what can happen to prices when you have varying states of supply and demand. So when demand increases and supply remains constant, prices will rise. So demand goes up, people want more of this, but there's only a fixed supply of whatever it is that people want. The prices are going to go up as people are willing to pay higher prices for this. You see this in markets like, let's say, recent example, Nintendo Switch 2, right? People were able to pre-order, but then there was a ton of people that didn't get it. Or, maybe it's in past years, like a PlayStation 5, right? So high demand for it, very fixed supply coming from the actual supplier, the Nintendos and the Sonys of the world. So prices are going up on the eBay market as scalper demand higher prices. And then when you have supply shocks, for example, PlayStation 5 is a good example from 2020. I mean, you had demand increasing. Everybody wanted a PlayStation 5. Supply is decreasing because they couldn't get enough chips. They couldn't produce enough of them. And prices started to go up big. And people were paying insane prices for PlayStation 5s in 2020 and even 2021 until we kind of came back to some stability between demand and supply. This is true for a lot of things actually during the pandemic. As supply deteriorated for many of these things and demand shot up, prices went up big. A counterexample, which we'll talk about during the pandemic as well, is gas prices. And we can look at that in a second. So when supply increases and demand remains constant, prices will fall. So, same number of people that want the thing, but you're making more of it, there's tons of availability. So eventually prices can start to fall. As people are willing to wait, that's when you get the discounts, right? The coupons and the whatnots of the world. When supply increases and demand increases, price will fall rapidly. So demand starts to go down. For example, when people stopped driving during the pandemic, demand for gasoline went down considerably, and there was a massive amount of supply that was on hand. Gas stations will keep the supply so that they can meet the demand. That's typical. And as demand started to drop, prices, of course, fell dramatically during the pandemic. So, some good examples of sort of real life scenarios where these things have affected potentially your life or people that you know. And when the market reaches equilibrium, that's when supply and demand are kind of happy with each other, and that results in a stable price. So when we talk about inflation and things like that, and you hear Fed Chair Powell talk about stable prices, that's essentially what they're looking for, is that there's a equilibrium between supply and demand of various things that people are buying, and the prices have stabilized. So those are the 5 base cases. Let's go through them again. Demand up, supply constant, prices go up a little bit. Demand up, supply down, prices go up big because there's a huge imbalance. Demand constant and supply up, prices will go down a little bit. Demand down and supply up, prices will go down big. And then when they're all equal, when you have demand constant and supply constant, you have stable prices. So those are very important concepts, and we're going to go through and talk about some examples of that beyond what we've already talked about. So the concept of supply and demand, it's also apparent in the stock market. You've probably, now that you're thinking about what we just talked about, you can probably think about how shares are the inventory, right? And those can be shares of a particular stock or whatever that might be, ETF. Can be impacted by the demand of buyers and the supply that sellers have, right? And the movement of your favorite stock or ETF or whatever is governed by that supply and demand of those shares. And of course, those shares can be influenced by algos, by institutions, by retail investors, and of course, the derivative markets like options markets, futures markets, etc. So let's look at what this kind of looks like if you were to look at kind of a high-level picture of a stock, right? So, you have this stock that's in consolidation here, and prices are in equilibrium until you start to see that demand exceeds supply. What does that mean? So people are willing to pay the same prices that sellers are offering here, and now all of a sudden they get really excited because some news comes out, or this stock's going to be the next great stock of all time, or there's a short squeeze, or whatever it might be, and now all of a sudden you have high demand for these shares, right? And so people start buying at the buying up these shares at the ask. And the ask continues to go higher and higher as sellers are willing to sell it at higher prices, and price goes up until supply exceeds demand again. So people keep buying. This is the markup phase. If you're familiar with Wyckoff, this is the markup phase until we reach another equilibrium where now buyers are not willing to pay higher prices and sellers can't get higher prices. And then once that flips again, and sellers are now unable to sell at these prices, and buyers are not willing to pay the same prices, they're willing to pay lower prices, prices will start to go down as you have oversupply. As people start to sell, take profit, they become sellers. You may have short sellers, whatever it might be, and then people are willing to pay less and less prices until you find again another point of equilibrium where people are willing to perhaps buy at even a slightly higher price than the prior equilibrium was. Now let's say we broke down this demand zone. It actually ended up being a redistribution, and we went back to this demand zone. It's possible that people will be waiting there to buy again, right? Because they maybe missed out on the first opportunity, and they're willing to look back at that demand zone. Price comes back down here, expect it to be demand as it was high demand before. If it breaks, then it's now been flipped into a supply zone. Here's a good example of like when prices go up. Nvidia is a good example over the last few years. You have periods of consolidation, price of equilibrium, eventually demand exceeds supply. Prices go up, people are, so here, nobody knows what's going to happen in Nvidia. All of a sudden, AI craze comes, everybody starts buying. A lot of people here go, there's no way it could go any higher. We've heard that so many times for so many different stocks. Darvis, if you guys have studied Darvis, he understood this very, very well. Made $2 million in the 50s just buying box breakouts on higher highs, right? On all-time highs, 52-week highs. Price goes up, supply exceeds demand, and you reach another equilibrium point, and then eventually people still are in a rage. They keep buying and buying, and when demand is really high, think about Nvidia and the AI craze recently. Once that supply is exhausted here at higher levels, you have This could be people selling, taking profit, right? Those could be the sellers that are the suppliers of shares. And then maybe there's enough profit taking that goes on, and people just continue wanting to buy it, and it goes up to the next level, right? So this is a pretty common. You'll see this all the time. Really good, strong moving stocks. Consolidation, continuation, consolidation, demand, continuation, consolidation, demand, continuation, until you reach a point where there's either too much euphoria, everybody's taking profit, or some sort of signal that might exist. And then you flip into some supply. And then you could get this situation, right, where it's decreasing demand. You start in the supply zone, sort of sells off. Once the supply exceeds the demand, right, you get down to another equilibrium point, and then again down to another equilibrium point. So another good example recently is UNH, where it's just been selling off. It's a crashing market, right? You get continuation down, and people are willing to try to buy it, but then you get another move down. People are continuously trying to buy the dip until it finds some sort of stable demand area, and then you'll actually finally see the reversal, and then these prior supply zones will get tested again. So how do you identify these zones of equilibrium? And we'll take a look at the chart in a second. You're looking for areas of price equilibrium where supply and demand were constant. So price was stable, right? And in trading, what do we call this? We call it consolidation, right? That's where you want it. That's where all the big moves happen, right? Small range leads to big range. Big range goes back to small range. So you're going to have periods of consolidation, then you're going to have periods of expansion, then you're going to have periods of consolidation and periods of expansion. That's the way it works. And then once price equilibrium is broken, we get a move up or down. You've heard these terms before, right? We call them supply zones and demand zones. You've heard this probably from 100 different traders. What these are essentially prior equilibrium zones where supply was greater than demand or demand was greater than supply. And so the expectation is in a revisit of these zones, whether it's an intraday zone or it's a intra-week zone, or if it's a bigger zone on a daily or weekly or monthly chart, is when you revisit these zones, the expectation is, let's say a supply zone is going to be initial resistance and a demand zone is going to be initial support. So you're looking to buy those demand zones as long as they hold again, and you're looking to potentially take profit at the supply zones with a potential move higher if that supply is eventually drained out. All right, so we've got a clean Nvidia chart here, and all I'm going to do is just use a line tool, and we're going to draw some lines together. So what we're looking for is areas of equilibrium where price has established itself in some sort of a zone, some zone of consolidation where buyers and sellers have agreed, and we're going to use those to mark up our zones, and then we'll see based on where price starts to move, we'll understand whether it's a demand zone or a supply zone. So starting with this, we have this big flag breakout in 2020. This is the pandemic, and then Nvidia breaking out. This is on high demand of GPUs, obviously, work from home, all that stuff. Huge move in 2020. Then it sort of reaches this zone of consolidation, kind of flaggy. So we can kind of mark this, it doesn't need to be perfect. You can see that there's some resistance here. It's not perfect, but we'll mark that top. And you can see that it's kind of some support here. So, maybe we can mark, this one's probably pretty good. All right, so now we've got a zone of equilibrium, and we can scroll forward and see what happens. So this is kind of where you'd be positioning for your next long, with risk being, below this bottom of zone. Got some tests at the top and the bottom of the zone before it starts to try to break out, creating a new high, showing strength, pulls back into the zone, and then finally breaks out, right? And then we keep going, we keep pushing, reach some more consolidation. We can probably draw another zone here. There's some support here. You can probably draw it right here, right? It's bouncing between this zone. Breaks out, back tests it, and continues higher. And we get almost to not quite a triple, almost a triple on this move from this zone. So from one zone to the next zone, and now we're finding some resistance here. We can mark, there's some support here, and You can see some pretty clear resistance right here, so we can just mark that. And this is probably going to end up being supply as we start to break below it and retest it from the downside. So here we go. Back tested the resistance and went back to this demand zone. Now, what do you think is going to happen from here? Right? A lot of buyers stepped in here, big volume, demand zone, prior demand, prior breakout. So a lot of people missed this move, right? A lot of people missed this move too. And so, maybe they've missed this move too. So now there's going to be buyers that are coming back in. You can see it's almost surgical, right? Surgical entry there. And, buyers are going to step in, and then it's likely people will start to take profit at the supply zone. So look at that. Comes back down. Buyers step in again, big volume. Accumulate here, and it goes and tests the supply zone before it sells off. So, in this instance, we had demand, tons of demand, right? People missed this move, another consolidation, back tests, lots of demand. Finally gets to the point where there's enough people trying to take profit. I mean, hey, if you've doubled or tripled your money, there's definitely going to be profit takers, right? There's profit takers here, there's profit takers here. It comes back down. People who missed this move, bought it up, went back. Again, this was prior supply, so it's going to act as resistance initially, right? And when you're in price discovery, you have these supply zones that get created. If they get tested again, often they're going to act as resistance. Comes back and tests demand again, loses demand, so there's more supply. People are still selling. People probably got scared after if they didn't take profit here, and now they're here, they might be, panic selling as we move back to test this lower zone. This is also the beginning of the 2022-2023 bear market. So you have, consistent sell-offs that are happening. But what happens? We go all the way back to this prior zone. Now, this is where everything gets super interesting. You can actually see it on this chart, and I talked about it back in 2023. There was a inverse head and shoulders on the weekly chart. You can see it right here. Here's the left shoulder, here's the head, and here's the right shoulder, right? And it's coming off of this initial demand zone that we drew up. You can see it. We're bouncing between these zones, right? Price is going between these zones. Retesting now this prior demand as supply, 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 demand, 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 right? We've got a beautiful IHS setup too. Now, what do you think happens from here? Explodes all the way back through this demand zone, through this supply zone. Now it's retesting supply. We just talked about that, right? In price discovery, let me scroll back. Price discovery, we have, prior supply zone. And now we come back and test it. It's going to be initial resistance, right? People are still selling here, taking profit again. Perhaps people that got trapped here and held all the way through this, now they're like, oh, okay, I made some profit. I missed out last time. Let me sell here. But demand, and then we got insane earnings, right? And it just ripped face from this zone, right? It just keeps ripping. Now you can see that there's another zone setting up here, right? Got support here, support here. So let's draw that, right? And, it can kind of show resistance here. So another zone, look at that. And it breaks out. Beautiful move. And, there's another one here you could probably draw. Look at that. Breakout. New all-time highs. Another zone. Probably this. Right? Supply, retest supply, breaks down, comes down to this zone, demand again, back into this zone, supply, retest supply. Now demand starts to exceed supply again. Right? Now you're starting to see some distribution. Comes back into this demand zone, right? This is a great place to buy last time, and breaks out. So that's it. And let's take a look at the weekly chart real quick so you can kind of just see what those zones look like. Look at that. We just mapped that out together. You're just drawing periods of equilibrium, right? And these equilibrium zones are going to get tested. You can see it. It's beautiful here, right? Look at this demand zone right here that we drew. And broke out, retested it, broke out, retested it and broke out again. So these are incredibly useful levels, right? This is where you can look at weekly charts, daily charts. You can do an intraday charts. You can do it in short term. I do that as well. But it's better to first learn it on the bigger picture charts. I think it'll be easier for you guys to spot. You should go back and test yourselves on a lot of different charts. Nvidia is a good example because I think a lot of people would have loved to trade something like this, right? So when you have high demand stocks, look for these. Mark your zones. They'll be incredibly great, useful spots to enter in. And that's Basic Trading Episode 4.